morning, and thanks so much for tuning into the trade setup right here on BloombergQuint Live. I'm Neeraj Shah, and every single day is an interesting day of trade for sure, but maybe a bit better than the kind of uh, onslaught from the bears that the bulls had yesterday. So maybe, just maybe, the red on the screen might be looking slightly better. First, the geopolitical developments. So, as expected, US, Europe, UK have unveiled limited sanctions against Russia. Germany, in fact, has frozen the key Russian pipeline project, which is Nord Stream 2 as well, which has led to or prompted to a few people believing that could this or whether this and some of the other supply issues, because Russia might go back with saying that we will not supply gas through Ukraine to the European region. And does this mean that the costs of gas supply to EU changes dramatically? Well, remains to be seen, really. But that's one big ponderable, of course. But I think the plight for the strategists who are largely bullish or who were bullish, they have now to price in escalating these escalating tensions, and you don't know when they end, or rising oil, surging inflation, Federal Reserve that's on the verge of raising interest rates. Oh, I tell you, the S&P 500 fell for the third straight day, but didn't fall as much as was looking at a point of time. So you could argue that there was a bout of recovery in the second half of trade, or towards the latter half of trade, if you will, and the futures were trading in the green the last time I saw them about an hour ago. We have changed a little bit, but that's the long and short of for what the futures market was indicating, or the equity markets and the global end are indicating, which is US, of course. Asia and the SGX Nifty will come up on your screen next. Or actually, this is a nice one. Yes, let's get this going first before we get to Asia and SGX Nifty. So why, as much as India, we're talking about that 16,800 number. Remember, I was speaking about it yesterday, and I'll talk about it again today. But on the global side, this key moving average for the S&P 500, this correction move, it's just around a 10% move from below which it slips into the corrective territory, or bear, or because 10% is correction, 20% is bear market. So S&P 500 is light at that level from where it's typically bounced back. Could it do this time around as well or no? Remains to be seen. As I said, for now, the futures seem to be indicating a bit of a pullback on the global front, the US market front. Asia and the SGX Nifty will come up on your screen next. Not as bad as what was there yesterday for both the Asian region as well as the SGX Nifty. So Hang Seng, CSF 500, ASX, KOSPI, all of them looking okay. So a bit of green on the screen, bit of semblance of sanity. And the SGX Nifty should come up on your screen next. I would presume it would follow suit. It will definitely not show a cut as deep as yesterday. But just the sentiment around trade too, slightly better than what was the case in trade yesterday. So we'll come up on your screen next, and you will see maybe a slightly better screen than what was the case in trade yesterday. Do we have an issue in pulling that up? Maybe. But yeah, about 25, 30 odd points in the green for the SGX Nifty. 107. Okay, I stand corrected. So fairly strong, fairly much stronger than what I'd seen about 20 minutes or half an hour ago. Okay, let's set the tone for the trade setup in the session today. So the market is likely to remain tentative, I think, with whipsaw movements being the order of the day. You might have this green right now. Does it last in the second half of trade? I don't think anybody can tell you that right now. Nifty still holding the lower top formation, which in technical parlance means negative, but it is also finding support near the 200-day simple moving average. Remember, all through yesterday and day before yesterday, I've been talking about how, because of a number of columns, including Dr. C.K. Narayan's column, talking about how that 16,850, 16,800 mark is the key support. Yesterday, we bounced back right from that support and rallied back. So that remains the key support for the Nifty. And from what I heard, I've met a few investors based out of Singapore. I've spoken to a few people back home in India as well, and there seems to be some bit of bottom fishing happening in companies which are reasonably valued, whether on PE or EV/EBITDA basis, but with stronger fundamentals, ROC, etc. So people are running those filters, and in spaces that they believe that there could be some bottom formation happening, there is money already starting to go in. So keep that at the back of your mind. Even on the DII side, the institutional DII side as well, mutual funds and insurance companies, DIs have been buying. 4,100 crores added yesterday, while the FIs sold about 3,246 crores. tells you a story or two about what's the kind of buying that's happening here. There's a bit of a noise here. I'll still try, and I hope you can hear me. There's nothing I can do about this construction noise, but I hope I'm loud and clear. What is also very interesting is that T+1 is here. The T+1 settlement cycle will be implemented in a phased manner. The first list of securities with T+1 settlement will begin from trade date starting February 25th. What T+1 essentially does is ensures the same day delivery of shares into the buyer's account and money into the seller's account. India arguably will be the first major stock market to do or usher in the T+1 settlement. I don't think any other market, Japan, US, UK, none of those markets do it. So India will be the first major market to do this. That'll be quite something, really. So we'll, of course, I think Sajid Mangat, my colleague, will, and maybe the two of us, or maybe he will do a short video during the course of the day of what implications, if any, does it have for the lives of some of you who are watching this and not quite knowing. Most of you will be knowing about T+1. For the limited few who don't, there's enough material on the internet any which ways, but we'll be doing a short piece during the course of the day as well, so that will help. What about stocks to monitor today? Not too many newsmakers. A few of them, I'm bringing them to you. So Hero MotoCorp, it won't really move the stock too much, but as much as people are talking about how the two-wheeler companies and the incumbents are far behind on the EV cycle, Hero MotoCorp is consistently putting steps. They have taken Ather Energy. They've now collaborated with BPCL to set up charging infrastructure for two-wheel electric vehicles across the country, across 9 cities, starting with Delhi and Bengaluru. So they are putting their foot forward for whatever it's worth. So watch out for this one. Butterfly Gandhimati on news. So Crompton Consumer acquired promoters 55% stake at 1403 rupees per share. The open offer will happen at 1.33.9 rupees per share. The stock is, I think, around 1351 or thereabouts. So not too much of an upside really, but yeah, at 1403, if the promoter stake is being bought by arguably a really strong brand in Crompton Consumer, maybe that brings about a reaction in the stock. So do watch out for this one. Was quite yesterday, but I think Butterfly Gandhimati, this news was circulating in the markets for the last few days. My guess is, if we can pull up the stock price once, my guess is that Butterfly Gandhimati would have had some bit of active movement in the last few days. If I was not wrong. Like I said, it was kind of floating around in the market, which is why from 1100 to 1350 already. So 1387 as we speak. So don't go out and buying this on the back of this news. It could still do well. I mean, under a Crompton, maybe the stock could even do better. So I don't know about that, by the way. I haven't looked at the fundamentals of Butterfly Gandhimati. If you're trading purely on the basis of the event, I think the juice is out of the game. Some of the stocks in focus include an SIS, which has won a 2-year contract of 225 crores. Dilip Buildcon, which has been declared as an L1 bidder for an order worth 1141 crores, and Thyrogar, which has said that they've received a judgment in favor of the tax litigations from Income Tax Appellate Tribunal. Maybe some of these react. Small news, but could react, who knows. Some of the stocks in focus include sugar stocks, by the way. Raw sugar prices inched up yesterday. I think the belief is that if crude prices stay higher, then more sugarcane in Brazil gets diverted to ethanol manufacture. Ethanol demand will perk up even more. Sugar, therefore, will be short in supply. So global sugar prices rally. I think all of these might keep the sugar stocks well in focus. So do watch out for those. HCL Technologies, which amongst the larger IT names is arguably one of the best valued companies on a PE basis. Of course, the growth numbers might be different compared to others, but still on the valuation front, much cheaper than the others. And promoters have been consistently buying in HCL. So do watch out for that. And United Breweries. Yesterday, I didn't get that note for you. My bad. But I think Motilal Oswal made a very interesting observation about how higher barley cost could hit United Breweries very negatively. And barley has a direct impact because of the Russia-Ukraine conflict, because Ukraine is a large producer of barley. So, and I think UB imports, it had in the last year some buffer because of earlier imports, but this time around, as per Motilal's analysis, they don't have a buffer, and therefore they might be forced to buy high, and that might hit the company. So do watch out for this one. So that is one more stock to monitor. Some promoter buying seen in Maharashtra Seamless, wherein some more promoter group has bought shares between 17 and 18 Feb, as well as KRBL, wherein the promoter group has bought about 1 lakh shares, if I'm not wrong, on Feb 21st, 2 days ago. So Do watch out for these two as well. And lastly, yesterday, remember viewers, I got you the note of Motilal on oil and gas and how they've downgraded BPCL to a sell, and kept a neutral, downgraded BPCL to a neutral from a buy. Well, CLSC is on the other end. They are buying BPCL, IOC, which is a common buy with Motilal, but even ONGC and OIL, they're saying that crude near 100 they don't see oil subsidies coming back, and they believe that the daily retail price changes will be reflecting from March once the election season is over, and which will prove to be a trigger for oil marketing companies. I mean, to my mind, almost every single Tom, Dick, and Harry knows that post-state elections getting over, the price hikes will restart. So I don't think it's an unknown news or a surprise news. Don't know how big of a trigger could these be. I somehow like Motilal's logic a lot more yesterday, but CLSA is a noted house. If the stocks move, maybe you know why they do. But yeah, the upstream oil companies, because of the upcoming price revision in the first week of April of administered gas prices, could be in a sweet spot for the next 7 odd months, because they are anyways on a higher base price compared to in the last 2 months compared to the corresponding period of the last year. And with the hike in gas prices, they could have a sweet spot even for the next 6 months. So do watch out for ONGC and Oil India. Could be interesting stocks to monitor. This is, of course, the energy index and what they have done. The larger names, it doesn't have an Oil India here, but ONGC has gained 12%, and it's kind of withstood the selling pressures reasonably okay. So which is why I say do watch out for some of the upstream oil and gas companies. That's the long and short of today's trade setup, viewers. If you're stepping out, please stay masked up and trade safe. Keep stop losses in place. The markets are more likely than not going to have a bit of a whipsaw because of the elevated VIX as well. So do keep an eye out on all of those. But thanks so much for tuning into the trade setup today.